Hey everyone, Dan here. Today we're going to do one of our in-depth looks at a growth stock that I think has about 2x potential and try to answer the question, is now the right time to buy? Or let's say at least a good time to buy, a logical time to buy. Those are the questions we're going to try to answer. As always, if you enjoy these videos, please hit the like and subscribe button. It helps a lot. And as I requested in my last video, since I changed up the format of these, this video and the last one, I'd be curious to know how folks feel this format mixes with the other purely trend analysis format that I had done in my previous 100+ videos. And if there's any strong opinions out there that this provides a better experience for folks or a worse experience, or if a mix of the two would be beneficial. So far, the latter is the bulk of the feedback that I'm getting, which is cool with me. But there's definitely more folks to weigh in, so I'd love to see in the comments what you think of this format and how you think this should play into the channel moving forward. All right, so let's get right into it and unveil this stock. Today we're going to talk about Peloton. So Peloton, I think that at the time that I made this deck, it had about 2x growth potential. It's had a really good day today, so it might be a little bit under 2x, but that is a high target to reach. But we're going to talk about sort of like why I think that, some cautionary takeaways as well, and then some price targets that we could look at if you don't want to hold out until it literally 2x's. Some places where you could trim as the stock price moves up, and what to look for if it happens to move down more as well. So I won't belabor this. I'm sure folks pretty much know what Peloton is, but basically they are both a hardware and a software company, selling stationary bikes and treadmills for a good chunk of change. But then they also have this monthly subscription service that allows folks to take part in their streamed fitness classes. So it's a mix of hardware and software, and that will play a role moving forward. So keep that in mind. And Peloton did have some selling off recently because of this consumer product safety warning. Basically, after a child died, they had said to stop using the Tread Plus model of Peloton. And so that's sort of like has presented this most recent dip. And so we'll sort of see what it looks like moving forward. Obviously, very unfortunate news there. But let's see what the stock itself is looking like. This comes from ARK Fund, so Cathie Woods Fund, and this is their take on Peloton, which I thought was an interesting way to look at the company in general. So they are very, very focused on them being a pioneering company. Basically, they're seeing the connected technology plus the fitness plus the streaming and immersion, all wrapped up into this like members focused boutique-y kind of feel. So fitness, technology, and media. And they're seeing Peloton as sort of like a force to reinvent these things. They say things like first of its kind, best equipment, proprietary software, world-class streaming, members love it. They're saying these things in their memo about Peloton. So I think that is an interesting take on a company that could otherwise just be seen as like overpriced fitness equipment, and then sort of like this ability to live stream a class. Which could otherwise be sort of like synced together. But if you think of Peloton as sort of this digital media, interactive, technology-focused company, then you open the door for things that Peloton is going to do down the line that might not be obvious right now and might give it this huge upside potential that just a streaming service and or fitness equipment company would not have. So insiders are pretty bullish on Peloton. You'll see toward the top there are more sells than buys, both in the 3 and the 12-month timeframes, but the amount that's being bought and the amount that's being sold is the inverse. So there's more sells than buys, but for the true share number, there's more shares being bought than being sold. And so that is sort of like, a bullish trend. And definitely would at least tell us that insiders aren't seeing something from the inside that's telling them, run, flee, get your money out of here, take it while you can. So sort of on the cautionary front, what I would watch out for is kind of like, even if this is expected, what the public's reaction to upcoming losses, or at least like down EPS for Peloton is. So if you look toward the left there, Q1 2020, there was negative EPS, and then they actually had positive EPS for Q2, 3, and 4 as the pandemic took shape and gyms shut down and people had to try to find at-home fitness solutions, and they had, capital available to them because they weren't spending it by going out. Maybe they had, received stimulus that sort of shored up additional funds for them. A lot of folks spent that on fitness hardware and memberships or services that allowed them to take classes from home. So Peloton was a big recipient of that kind of activity. And so it actually turned them into positive EPS for for the final 3 quarters of the year. But what we're looking at now is on May 5th, we expect earnings to come out again. And while the sales themselves are likely to be incredibly strong, the EPS is expected to once again turn negative. So it'll be interesting to see what the reaction to that is, if it is so anticipated and so expected, and if the reasoning for it is so logical that, folks don't really care and they're like, let's buy in since this recent dip has occurred. Or if folks are like, oof, I'm really not comfortable with this company getting back to losing money again. I'm going to pull out of it for now and kind of sit on the sidelines and see what happens. So that'll be interesting to see. So just be careful if you're holding around earnings, especially if it's like a big position or if it's an options position that could be really adversely affected by any sell-off or negative sentiment. So what happened that caused this? So basically about 6 weeks ago, there was this article that came out and basically they said, hey, we have so much demand. We had this $1 billion sales quarter, our first one ever, but we're going to squeeze a bunch of that profit out because we need to solve our manufacturing and delivery issues. So basically their take is COVID caused all of these issues with manufacturing and with delivery, and that mixed with the huge bump in demand caused them to have issues fulfilling orders in a timely fashion. So they're going to sink over $100 million into expedited air and ocean-based delivery for the next 6 months to try to square away and get back on good footing with their delivery and manufacturing times. So we'll see. That is the dicey thing from my perspective on Peloton, is that they aren't purely a software company where you can sort of like infinitely scale things in the cloud or in a software capacity, but rather you have this hardware manufacturing delivery component that's very analog feeling and requires all of this hands-on human-to-human activity. And when something happens that causes a delay or a kink in that infrastructure, it has a big adverse effect on Peloton, like turning 3 previous quarters of positive EPS into, revisiting negative EPS again. So it could really have a detrimental effect on how folks see the stock moving forward. I don't know, but that's my sort of like biggest point of caution in terms of what I'm seeing with Peloton. Institutional holdings seem to be not shook at all. They are increasing and holding their positions, as you see, at a pace that far outweighs the decreasing and sold out positions. And these are really renowned funds like Vanguard, BlackRock, and ARK. All told, at the time that I collected the info for this video, there were 749 institutional holders. So, big ownership there. 78% of the ownership in Peloton is from institutions and good names, and they're increasing. So take that as any comfort that you might. Analysts are also really on board with this, a high analyst target of 190. So that's where we get our just about doubling number. The average 161. There is some like crazy outlier that has a $45 target on it. So yeah. But anyway, even if it does reach that average, that's over 60% of upside. And so that's a pretty good return on your investment. And this is a good pool of analysts to pull from. Not to say that all of the analysts in this pool are good, but just that there's 24 ratings. So sometimes we'll see analyst ratings that be like 6 or 3, and that's just not a very deep pool from which to be gathering information. So 19 of the 24 say buy, 4 say hold, and 1 says sell. I assume that's the $45 person, whoever that is. But yeah, so that's what the analysts are saying. From the technical perspective, I don't have a position yet. I almost took one this morning. I was like, hold off, because I want to see a couple of things. I want to see what it's going to do at that 104.75 mark, because you see the previous support there and then immediately was resistance. That to me says that it's a pretty strong zone, as you would expect, being that it was previous support. And so it might bounce down from there a little bit. It might also go down to fill that gap at about 90. Let's just call it $99, because if we call it 98, that's going to be too low. But I would be really keen on taking a position, at like the $100 level. Oh, sorry, the gap is at 100. The bounce level is at about 99. So 98.73, that yellow cautionary zone. But I'd be really keen if it does bounce back down to about 100. If you wanted to take a very conservative approach, you could buy in down to 100. And then just set a stop loss at like $98. So worst case scenario, you have that small, loss that you would have to incur, and then look for a new entry point if you want. But, that's one potential way to think about playing it. If it does continue to move up, I would look for it to gap up to that 106. So getting support at that 104.75 would be a really good sign, in my opinion. That would be a different way to play an entry point, is if it doesn't gap down, but it just develops support at 104.75, then I'd feel pretty solid, because I would expect it to fill that gap at 106 and then at 113. And then if you wanted to take some profit off the table as we move into the 120s, I think that that's definitely a reasonable thing to do. If you're a longer term holder, or have a lot of conviction, confidence in the company, I would look for something around 180 if you're willing to hold, and add on dips for a longer term play. For the indicators, the MA12, as you see there in orange, has just crossed over the 20, so that's a bullish sign. And now, in order to head toward the 50 and then the 180, obviously we're still in a downtrend as the 50 and the 180 are over the price action. The MACD, the bearish momentum has really died down. Bullish momentum is picking up, so that is a very good sign. That's what makes me think maybe we won't get a gap down to about 100, but I'm willing to see if it. Yeah, I think it'll either gap down to 100 or it'll get support at that 104.75. And in either case, either of those things playing out to me would be a good possible entry point. RSI looking like it might offer a dip just because mid-range is pretty high based on the fact that it has recently spent so much time in oversold territory. So we might get a little dip based on the RSI. So that might drag us down closer to that $100 gap fill dip buy range that I'm looking at. All right, so that is my take on Peloton. Please like, subscribe, and share these videos. If you can, comment. I look at the comments every weekend, so just be aware that, if you comment on a Monday or Tuesday or Wednesday, whatever, if you comment on a weekday, I'm not going to see it and probably not going to respond until the weekend, but that's nothing about you. That's just me trying to not be super crazy about, having YouTube rule my life. But in any case, I hope everyone has had a good week so far and is enjoying the trading. It's interesting to see things picking up across the market. Hopefully that's a good sign that some of this selling off is turning a corner and we can get back into the green. In any case, I wish you the best of luck with whatever you're trading, and I will see you all in the next video.